What's going on? We got a lot to talk about today. We do. I'm not going over the homework. We're not going over the homework. We're not doing that. We're not doing that. But yeah, I'm gonna just wait like one to 2 minutes and then we're gonna get started. But today's webinar is going to be about how to scale in on higher time frame setups. Week by week, we take 5-minute setups. Sometimes we get the higher time frame confluence, but for the most part, we do not. It just be a 5-minute setup. And I just want to break down the difference, like from a setup that we would take right here versus a setup like this. Like these are two different types of setups. Okay, like this setup that we would take Friday, and then this would be a setup that we would take, what was this, Monday or something like that. These are two different types of setups. So you just need to understand like what you're really taking. Okay, because again, we always be taking 5-minute setups with no higher time frame confluence. And then people be wondering, okay, why didn't this runner hit or why didn't it run at all? We're not taking setups on a higher time frame. So that's really what we're about to talk about is we're trying to scale in so we can get a higher RR. And I'm gonna show an example of the 1-minute chart. I don't trade the 1-minute chart, but if you do, I'm gonna show you how you can trade the 1-minute chart on like a 1-hour setup. So really, I'm just gonna be breaking down 3 time frames, and then the last 2 charts, which is US 30 and USD CAD. I'm gonna show how you can get in on the 1-minute chart. Okay, so again, I don't trade on the 1 minute. That's not what I do. But if you do, if you want to even a more better RR, then it's gonna be the webinar. Okay, so let's get into it. So I got a couple questions. People want me to break down all the USD trades. This guy asked me, how do I know, like, how do I get a bias on a 5-minute chart? Looking at the 1 hour. What was the other question? I wrote it down. Oh, somebody also said, how do you know how to know when the trend is ending? Okay, so as far as the trend ending, do we know that the trend is going to end? We don't really know. We really don't know if the trend is going to end. The only way we do know that it's a sign that the trend can potentially end is if they get to do a break of structure or we're heading to a higher time frame demand or supply. Okay, so read the chat. Okay, break down losses. Okay, what losses do you want to break down? But before we get into that, let me just break down these all USD trades. Just get this out the way real quick, and then I'm gonna just answer questions right after that. So right here, all USD. This was Friday. This was just a simple trade. I'm not gonna lie, like it's just nothing to it. This is just a 5-minute supply. Tapped into it. It started dropping. It gave a little over a 1-to-1, and then it went up. And then it had a demand that was literally sitting at the bottom. I'm pretty sure nobody even took this demand right here. And it just started going up, and the rest was history after that. Now you see how simple this trade is. There's no confluence on anything else. It's just a 5-minute supply. Like that's literally it. Like it's nothing to talk about. It's just a 5-minute supply, wicked into the supply, drop. That's it. Like nothing is literally nothing else. Same thing far as this trade. This trade, when I took this trade, I immediately saw that this was tapping into a demand. So as soon as I saw that it was tapping into a demand, right here, I just instantly got out because I didn't know if it was going to hold or if it was going to break. Some people didn't get out right here and they lost on this trade, not gonna lie. But if you paid attention to this candle right there, which left a gap, it literally tapped right into it and then shot up. Now, the 5-minute can be very noisy. It can be very, how can I say, very overwhelming sometimes when you just see all these gaps. Like, okay, is this one gonna hold? Is that gonna hold? Which one is gonna hold? If you are having a hard time on a 5-minute, start taking 15-minute setups, or you're going to have to wait until you see some type of 1-hour setup. I talk about it all the time. Yes, I'm taking 5-minute setups all the time, but is this setup have any confluence with a higher time frame? Okay, because most of the time we're just taking 5-minute setups. Like, let's just be real. We're just only taking 5-minute setups. But if you want the nice, like the good trades, because I'm going to break down all USD, because all USD on Monday, or was that Tuesday? I'm not sure. Earlier in the week, this trade, I was like very confident this was going to drop. Okay, I only took this first supply, but the second supply, it went even crazier. But it's a reason why this dropped this hard versus this doing that and this doing that. You got to understand the difference. This was just a 5-minute setup, but this one was a 1-hour supply. So Let me go to the 1 hour. I'm just gonna go to the 1 hour, and I'm just gonna break this down like really slow. So we approach a New York session. This is the light gray shaded area. Then we have a supply on the 1 hour that just tapped into it around like London session, somewhere up in there. So this is what I did. I went to the 15-minute chart, and I wanted to see if I could make the zone smaller. Okay, so this is what I've been doing recently, but it's still kind of the same thing. The 1 hour supply, I would keep the box the same, but I would put a line on the 15-minute zone, but just keep the line on there. Instead of doing this, instead of like making the zone smaller, I would just keep the zone like the regular size zone for the 1 hour. I would just keep it the same, but I would just mark up the 15-minute supply. Like, you know how like when I show like how you adjust the zone, I would just keep the line right there. Because again, sometimes it may not touch into that 15-minute supply. It may not touch into that 5-minute supply. Like y'all know how like we scale in and we make the zone smaller. Sometimes it may not reach the lowest demand or the highest supply. It may not reach it. So I will put a line right there to see, okay, where do price want to stop at? But keep the 1 hour zone completely the same. Don't change the 1 hour zone, but just keep the lines on the different time frames to see where are they going to stop at. So right here, this is the 15-minute. This is the 15-minute supply right here. And I would just leave a line right there. Then I'll go to the 5-minute. I'll go to the 5-minute, and I'm going to go back over here in this area. Now you can really only adjust it just a little bit far as the 15-minute and 5-minute. So you really could just slide that up just a little bit. That's why I say you got to understand gaps, because you may be a little bit lost right here. You may be a little bit lost, but you got to understand gaps. So that 15-minute supply, I just move that line up just a little bit just to see, okay, this is the highest point in that 1 hour supply if I scale down to the 5-minute. Okay, I hope I'm not losing nobody, because if you're new and you're not really understanding gaps, you got to catch up on the webinars. Like you just have to. Okay, so I move the 1 hour. Well, I didn't move the 1 hour. I moved my 15-minute line to the 5-minute supply, which is right here. Now, what we're gonna do during New York session is wait and see what are they going to do? Are they going to tap into the 1 hour supply? Are they going to tap into the 15-minute supply? Or are they going to tap into the 5-minute? Whatever they do, we have a sell bias. We have a sell bias because we are already in a 1 hour supply. So when I called this trade out, I was very confident because we're on the 5-minute and we have a break of structure right here. Let me take this off. We have a break of structure right here. It tapped right into it and it immediately dropped. And then through another supply back to back with another break of structure. And this one went even crazier. I never caught it. I don't know who did, but this just went crazy. If they tap into the 1 hour, do you enter off the 5-minute? Me personally, I just like to see the identical setup occur during the time that I trade. So if they already done tapped into a 1 hour supply, which is this big zone right here, I'm not up at that time. So I'm not gonna catch it. When I wake up and I see that they already did that, I'm gonna see, can I find some type of supply setup? Can I find a resistance, liquidity grab type of setup, something like that as far as me selling? I'm trying to sell. Okay, so that's why I didn't consider, like some of y'all considered this demand right here. No, we already tapped into the higher time frame supply. So we shouldn't even be looking for no demands at all. That's what I'm trying to break down on this webinar is like, you got to understand the difference from this type of setup, these setups, and these setups, these setups. Yes, we're going to catch these setups, but they really only going to give you like a 1-to-1, 1-to-2, maybe 1-to-3 some days, but you're not going to get a 1-to-6. You're not going to get no 1-to-6 R trade if it don't have no higher time frame influence. You're just not going to get that. You may get some runners. Don't get me wrong. You may get some runners, but if you're trying to strictly look for like high risk to reward trades, you need the higher time frame and you got to scale in. That's the only way if you want to consistently get higher risk reward trades. So after it hits, after it hits the 1 hour zone, then you look for a 5-minute setup. Yes, but the identical setup. So I can make my zone smaller. So you see like this line that I just adjusted far as that 1 hour supply. You can adjust it, but sometimes the market may not want to fill in that gap. So or like usually I do something like this and I just make it like that, but then look at your zone. this would be the zone that it never tapped into. And now you thinking like, okay, what is the direction? They tapped into the 1 hour, but they never tapped into the 15-minute supply that's within the 1 hour. I hope this is making sense. Like, I feel like I'm losing, buddy. Am I losing, y'all? Please let me know if I'm losing, y'all, before I just keep going. We good? Okay, we good. All right, cool. Okay, cool. So I'm gonna replay that because we got like 3 other subs I'm gonna break down, but I'm putting the line there just to make sure. Okay, are they gonna tap into the 1 hour, or are they gonna tap into the 15-minute supply or the 5-minute? You got to be prepared for all 3 because we don't know where they're gonna stop at. We can't like automatically know, okay, this is a higher time frame supply. They're gonna just go all the way up into the 5-minute supply, or even for people that trade 1 minute, you will have a 1 hour supply, but are they going to go all the way at the top to tap into that 1 minute supply? No, it's not guaranteed. So you have to prepare for which one they're going to stop at. And then whatever one that they stop at, me personally, I'm going to wait until I see an identical setup on a lower time frame. So I'm going to say this one more time before I go to the next chart. If I see a 1 hour supply, I'm going to go to the 15-minute chart to see where I can put my horizontal line within the 1 hour. I'm going to go to the 5-minute to see where I can adjust that horizontal line from the 15-minute. Now, wherever they stop at, I'm going to wait until I see an identical setup on the 5-minute chart. And for people that like the 1 minute chart, I'm going to show you how to scale in on a 1 minute chart today. Okay. I just want to, you know what I'm saying? I'm really trying to make this stuff clear. But 15 and 5-minute are in a way considered higher time frame supply as long as it's within the 1 hour. Yes. So if it's in a 1 hour supply, you can scale, you can scale, well, not scale, but make the zone smaller. But me personally, I'm going to put a horizontal line. Okay. Just so I won't miss the move, because sometimes it's going to happen like that. Sometimes you may make your zone smaller and it never taps into your 15-minute zone or your 5-minute zone. Now it's like, okay, damn, I missed the move. Whether just keep the 1 hour zone like that, but just mark up the 5-minute and the 15-minute zones within the 1 hour so you won't miss the move. Okay. So let's just go to USD JPY. Let's just get off of this. I'm just gonna take this off because we don't care about it. We're not talking about 5-minute setups right now. We're talking about scaling in to get bigger rewards. Okay. So right here, we are stuck in between supply and demand right here. But right here is strictly just on supply. So if we're at supply, we got a market structure break right here, got a momentum candle dropping and attached to supply. I'm going to go to the 15-minute chart. When I go to the 15-minute chart, I'm going to see where is the gap that I can make the zone smaller, but I'm not going to make the zone smaller. I'm just going to mark it up. I'm just going to put a horizontal line where it can potentially stop at. Do we know it's going to stop there? No, we don't know if it's going to stop there, but I'm going to mark it up just in case so I can know where I'm at. So this 1 hour zone, you can make the zone smaller with this green candle right here. With this green candle. Am I recording? I hope I'm recording. I'm gonna be sick if I'm not recording. Hold on, y'all. Okay, I'm recording. Ooh. Hey, that was gonna be tough. But okay, so all right, so this is the 15-minute zone right here. And we're in a 1 hour supply right here. So let's fast forward. Where is that? Okay. So it looked like they're rejecting the 1 hour zone. If you go to the 1 hour, it looked like they're rejecting the 1 hour zone, but it never tapped into the 15-minute zone. Let's go to the 5-minute. The 5-minute. Can we make our zone even smaller on the 5-minute? If we look up in this area, because this is the area, because remember, gaps, you always have to look to the right-hand side of price to see how can you adjust the zone. Do I have to do it have to break on the 15-minute first? No, we're just marking up. What we're doing right here is this is a 1 hour supply. We're marking up the 15-minute and the 5-minute to see where they could potentially stop at, but we have to prepare for each scenario. So I'm not saying like, okay, take the 15-minute break or wait for the 5-minute. What I'm doing is I'm marking up the lines to see where they're going to potentially stop. And then wherever they stop at, I'm going to wait until I see an identical setup on the 5-minute. That's literally it. How to enter these trades? Should I wait for the candle break or should I get in aggressive? That's your choice, bro. That is your choice. I can't tell you to get in aggressive on each trade, or I can't tell you to get in on the break of the candle each trade. It's kind of up to you, bro. I like the break of the candle. Some days I would get in aggressive, but when I do get in aggressive, I instantly lose. That's just the risk that I chose to take. Like it's literally nothing I can do about that. Most trading gurus say trade one pair, one session, but with your planning, man, your routine is to check top 2, 3, 4 pairs. Yeah, no, this work on any pair. You can do this during London, but me personally, I just like New York session. I don't. If you can't wake up in the morning when we trade, then trade New London session. It's really just up to you, bro. Honestly. And if you want to just stick with NAS 100, a lot of people in the Discord just strictly just trade NAS 100, nothing else. So it just really depends, bro. But me personally, like I look at GU, AU, SPX, and NAS. So it's just up to you. Okay, so let's finish this breakdown right here. So right here, it never tapped into that 15-minute. And then if I try to adjust this zone on the 5-minute, I can really only move this line up just a little bit because this candle got tapped into with that wick. And that's really about it. I'm not gonna lie, that's really about it. So let's go to the 15-minute chart. Now, for this specific setup, can you use this supply right here? You can, but me personally, I know realistically, I'm not going to do that because I don't trade on the 15-minute. So for people that do trade the 15-minute, this probably worked out for you. But I know I'm not going to do that. So that's just unrealistic in my opinion. So what am I going to do? I'm going to wait until the 5-minute present a setup, and then I'm going to take the sale. Okay. So that 15-minute supply that held, it don't really matter to me because I know I'm not going to take that because I'm going to wait for the 5 minutes to throw a setup. So let's fast forward. Now, in this very moment, we have a bias. Okay. Like we have a bias. Like, do we not have a bias? We do, because we already tapped into a 1-hour supply. It never tapped into that 15-minute or that 5-minute supply within the 1 hour, but that's okay though, because the market don't always want to do that within the 1 hour. I mean, the higher time frame setup. It don't always want to do that. Okay, that's why we just got that line marked up, but it never reached up there, but it tapped into that 1 hour supply. Because at the end of the day, this is a higher time frame setup. Okay, does a 5-minute setup have a breaker structure? Let's see. And it got to be the high probability. I'm not doing no low probability on these examples. It got to all have gaps on it, and they all got to have a break of the candle. That's literally it. So right here, this one got a break of structure, but it's already tapped into, so that's a no right there. Okay, this one don't have a break of structure. This one don't have a break of structure, so gotta take that one with a grain of salt. But let me draw this out. Make sure so it won't. Did it tap? I'm not sure. I think it tapped. Let me be sure, because you gotta stretch these candles out because sometimes they be doing sneaky stuff. Let me see. No, it tapped for sure. Yeah, it tapped. So this is still a no for me. I still need to see something that's going to get the high probability supply, and it just got to line up with the higher time frame setup. If you're taking setup, what causes losses? What causes losses? Either counter trend, or it was just a plain loss, or you ran into a demand. That's it. Counter trend. It was a plain loss and no explanation, or you ran into a demand. That's it. Like you literally ran into a demand. So this is not what I'm looking for right here, because that's already tapped into. So we just literally have to wait until we see an ideal setup that's going to occur, that have a gap that taps into it. Okay, there go one right there. That's one right there. I'm gonna just fast forward and see what happens. There go one right there. There go another one. Okay, so we have one right here that just happened. One right here that just happened. But this one only gave you a 1-on-1. But then this one, hold on, let me see how far did this drop? Okay, this one was really it. I like this one more because this one actually don't have a breaker structure. This one do. So if you're looking at this, like the time of the day, this is really for Asian session. Like this pair, like it moves during Asian session in New York. But understand when it finally taps into, you said I lost y'all. How I lose you, bro? How I lose you, bro? I don't want to keep going if I lost you. How did I lose you? How did I lose you, bro? Did it tap what? What were you checking for? Oh no, what I was checking for. Oh, if you're talking about right here, I was checking to see if it had a gap on it. Like these setups right here, like this one right here, it got tapped into already, so I didn't want to take it. What I was looking for was a supply setup that had a gap. This one right here, the box that I just drawn out that I was stretching out the candles, it tapped into it already. So this is considered low probability because it already tapped into it. I'm strictly looking for higher probability. This one didn't have a breaker structure. This one didn't have a breaker structure. This last one at the bottom broke that low and then came back up. That's what I was looking for. So I was looking for a breaker structure. That's really what I was looking for. I'm not gonna lie. Did that first supply have a breaker structure? This one up here, this one is low probability, but no breaker structure. This one, no. This one, yes. It broke this low right here. Okay. All right, so this whole setup right here, you probably missed this if you was waiting for that 15-minute or that not the 1 minute, but that 5-minute supply that was within the 1 hour. So this is what I mean by just putting a horizontal line and see where they reject from, and then wait for an identical setup, which was this setup right here to take the sale. Okay. Okay, you want me to unmute you, bro? Okay, I'll unmute you, bro. What is that? Stunning jam. Okay. Okay, here you go. All right. All right, you should be unmuted. You should
But
be
Dua,
what's going on?
Quick question for that previous box, the one that's up higher, right?
Right here?
Yeah, it kind of broke structure because if you look, like you had a bearish candle right here, right? And then I wish I could annotate, but you had that bullish and you had that bearish candle right before it, and then that candle came down. So it kind of broke structure.
On this setup, no. Okay, so if you're talking about this structure right here, are you talking about this structure right here being broken?
No, I'm gonna show you. Like, I wish I could annotate. If you draw this little mini bullish candle, like the pin bar candle, I guess it's called.
This one right here?
Right? Yeah. If you draw, okay. Yeah, if you go back to the line chart, you'll see like that, right? Isn't that a structure break?
Yes, but that's before it though. Like, I want the structure to happen basically on my setup. So like this structure, it broke structure, but that was before the setup even happened. You get what I'm saying? So okay. I will want to see a structure and then a pullback to my setup. I mean, not a structure. I want to see a market structure break and then a pullback to my setup. So right here, I want to see this break lower, then come back up. This is the low right here. I want to see this be broken lower than this area and then come back up to my setup, if that makes sense. It broke structure previously, but I want to see my setup have a breaker structure. The setup wasn't over here. The setup is not over here. It happened afterwards. Okay. So that's what I mean by a breaker structure. Like, I want to see a breaker structure, pull back, not breaker structure, then supply, and then we're dropping. Like, no, I hope this is making sense. Like, this is a breaker structure right here.
Yeah, I know what you're saying.
That is a breaker structure. But then look at the setup. This is the setup. It never broke that low right there. So it's just like, we just got liquidity down here, which that could be confluence though, but it didn't have a breaker structure though. You feel what I'm saying?
I would have took this trade because that's the stuff that I struggle with.
Okay.
That's the type of stuff that I struggle with, to be honest with you, because I never look too low. I just look for those little small breaks and then look for the setups because it has a gap right here. I see the gap in the candle. So I'm like, oh, that's a high probability setup. For me, it is. But okay. I see what you're saying.
Yeah, for sure.
Okay.
All right. Well, you have chose the green candle between the two candles that you drew. The green candle between, Yeah, I don't. Which one? Because it's like hella green candles over here. No, but this honestly, like, I'm gonna wait until I see a market structure break and then a supply. That's literally all I'm waiting for. Good information. Between the boxes. Oh, you talking about this one right here? This setup right here? I think I don't know how to pronounce your name. I'm just gonna say Claire, but I think this is what you're talking about. Oh, and another thing, I'm glad you just said that. Look at the 200. The 200 is at the bottom. That's why I say, like, when you're going towards the 200, you're not gonna really know a reversal is about to happen because you're not even looking at the higher time frame. See, this is what we would do if we're not looking at the higher time frame. We do something like this. And we'll take a demand because the 200 is right there, but then we're not even realizing that they are just tapping into a higher time frame supply, like between the two zones you just drew. Take this stuff. I'm lost. I'm about to unmute you, Justin, bro, and then can you just point me to what you're talking about? Because I'm like, you feel me? I think it's Justin G. Yeah. All right.
Yep, that's good. So right there, those two boxes that you just to the left. Well, yep, that green one right there. So I would have boxed that one as my zone, and I would have called that the supply zone.
No, sir. No, sir. It already got tapped into. So say if I put a zone around right here, and then
right there, exactly,
and then drew it across. Yep. No, sir. I'm looking for higher probability. I'm not looking for the ones that already got tapped into. So with this being said, look at that red candle. Look at that red candle that wicked into that box and then closed inside of the box. This candle right here, put an arrow on it. This would have not made me want to draw a zone right there, just off of that red candle. Now, if it would just no wick and it would just like, it was like a green candle right there, and then this green candle, I mean, not this green candle, this red candle right here just blasted out of it without the wick, yes, but it already tapped into it, so that's a no. That is a no. Can y'all hear me? You said I'm breaking up. Okay, what I was saying is I wouldn't have drawn my zone up right here because it wicked into the box and then closed inside of it. Okay, so since it closed inside of it, no, sir. Like, I'm not going to consider this zone at all. Like, again, I'm only looking for a setup that have a gap, and then we're going to take the break as a reverse for a sale. But this one already got tapped into, so it's just a straight up no for me. Not gonna lie, it's a straight up no. But that was a good question though. All right, so any question before I go on this demand setup, because it's a demand on this as well. Any questions? And high probability says we are targeting gaps and not liquidity. We're targeting liquidity far as like take profits or paying attention to where they're grabbing liquidity, but like supply and demand, like we're just looking for where they are filling in gaps to reverse. But like you can aim for liquidity far as targets and stuff like that. Can you give an example of a loss that caused by going into a demand? Okay, so I'm glad you just asked that, bro. I'm glad you just asked that. Because some people just strictly just look at the 5 minute without looking at anything else. They just do this. They're okay. This is a gap right here. Boom. We're gonna just start buying. Like, no, bro. Like this is something that you will lose on. Like right here, you would literally lose on because you're not even aware of what's going on a higher time frame. You're just let's just buy. Like it's high probability, bro. You gotta look at the higher time frame. You have to. Kind of trend and playing loss. I do want to go over this stuff before we start talking about losses though, for sure. I really do, because I had this all mapped out for today. So let me see if we have extra time for us going over the loss, like how to know like if this is a kind of trend setup or not, etc. Okay, so let's go to this demand setup that's at the bottom. Okay, so this demand setup, we're just going to delete this. We don't care about that supply. This demand setup right here is tapping into this 1 hour, okay? It's tapping into this 1 hour. And if we go to the 15-minute chart, can we make our zone smaller? Yes, we can, but it's just a little bit like right there. Like this is really the 15-minute. the 15-minute line, but does it really matter? It kind of line up perfectly with the 1 hour. So I'm not even going to mark it up because it don't really matter. Okay, now if I go to the 5 minute, and I go to the 5 minute, we have a gap that's inside of the 1 hour demand. So I'm going to draw my horizontal line right there on that candle right there. And I'm going to keep my 1 hour zone right there. But I'm just going to mark up my 5 minute. Now, how I would approach this if I'm going into a 1 hour demand is I'm going to literally wait until I see a 5 minute setup occur. Okay, I'm not going to just start buying right there. No, I'm going to see is they going to throw another setup on my entry time frame. Okay, now again, some people, they just going to have buy limits just ready for whatever scenario. I'm not preaching that. That's not what I'm preaching. If that's what you want to do, that's what you're doing. What I'm doing is I'm waiting for a higher time frame zone to get tapped into, scale down using horizontal lines, and waiting for an identical setup to happen again, because they're going to keep doing the same type of setup. When they want to keep going up, they're going to break structures to the upside, throw a demand. Like if it's coming down to a demand, even on a 1 minute, you may see another demand happening at your entry on a 1 hour demand. Like it's just going to it's like fractals, like it's going to keep happening on different time frames. But let's fast forward. Let's fast forward. Okay, now what is this right here? They tap into that 5 minute supply, and then they do a market structure break right here. This is all structure right here. All of that is structure right there. And they break that high right there. So since they broke that high right there, and we're on a 5 minute, I'm trying to look for a buy because we're already at a 1 hour demand. Now let's look at the EMAs for people that care, that want to put a lot of emphasis on EMAs. Yes, the EMAs matter, but when you at a higher time frame, the entry time frame is not going to look like it want to go in that direction. Like you ever notice, like even on that all USD trade that I called out on Friday, it was a supply, but after that supply hit, it just went straight up. It's because that was probably a higher time frame demand or something like that. I'm breaking up.
Yeah,
Am I breaking? I'm breaking up.
Yeah.
Okay. I don't know what's going on. Let me know if I'm clear again. Did you unmute, bro?
Yeah, you clear.
I'm good.
Yeah, you good.
Okay. All right. Okay. So right here, let me just go back so I won't lose my train of thought. This is a 1 hour demand. Went to the 5 minute. We really couldn't adjust it, and then I went to the 15 minute first. Really couldn't adjust it. Then I went to the 5 minute to make to draw my horizontal line to see where they could potentially stop at. Okay. So this right here, this is a demand right here. This is literally a demand right here. Aggressive buying. And all we're going to do is just wait. Now I'm going to look at the EMAs. Would any of you guys be confident to take this demand right here if you didn't know that this is a higher time frame confluence? If like this zone wasn't here, would you even consider this right here? I'm going to take this off. Would anybody consider this right here? Would you really think that this would be like a demand that's going to hold? No, you wouldn't, because we got the EMAs at the top. We thinking this is a sale. Everybody going to think this is a sale. Even me, I'm going to think this is a sale if I didn't check the higher time frame to see, okay, this can be a potential area that they're going to want to reverse. So that's why I say, like, look at the 1 hour. Like, it looked bearish, but we are tapping into a higher time frame demand right here. They're ready to reverse. So let's fast forward. Fast forward. And we just wait. Taps into our zone. Let me stretch this out. You feel what I'm saying? Like, catching reversals, most of the time when a trend is about to end, they're already tapping into another zone on a higher time frame. Like literally, they already tapped into another zone on a higher time frame. So when people be like, okay, how far is the trend going to go? They're going up there to go into another zone. Like they're just headed to fill in another gap to reverse it. But timing is key though. So you're saying the 5 minute setup within the 1 hour zone is riskier to take. That's why we wait for another setup. No, I'm not saying it's not riskier because some people have buy limits just strictly on the 5 minute and they accepting the risk. Some people just literally have like you see how I had that 1 hour demand and then I had that horizontal line right there on that 5 minutes. Some people have a buy limit right there, literally right there, like just boom, like soon as they wick them in, they in a trade, and it can be a very sniper entry, but it's not gonna always work out like that. And I won't tell y'all, oh, have a buy limit right there, you're gonna win. No, I'm not gonna say that because I have seen that that not work. So that's why I personally just wait until I see another setup on my entry time frame and I'm taking it. That's just what I like, honestly. So you create a one hour set zone, then let it tap into the zone on the 5 minute, let it create another setup on the 5 minute. Absolutely, right there. Yes, just like that, bro. Just like that. This is at 1 a.m., not New York session. What time is this? Yeah, this is Asian session. So this is USD JPY. You're gonna want to do stuff like this for us pairs that move during a session that is for. So USD JPY is gonna move during Asian and New York. Don't do this on US 30 in Asian session. That doesn't make sense. Timing is key. And I'm gonna show you on USD CAD and US 30 on the next setups how timing is very important when it comes to trying to catch these like great trades, like these great setups. Like timing is very key. So like if you want to trade London, trade some pound pairs, trade some euro pairs or something like that, because you're gonna see like these certain setups, like they're gonna happen at certain times of the day and you're not gonna be able to catch them. Let's say you have a supply and demand and you're waiting for the break of the candle, but the new 1 hour candle hasn't made its new high. Are you still taking a trade? The new 1 hour candle haven't made its new high. No. It's either they're gonna hold at that demand or supply or they're not. It's just that simple. But at the end of the day, I'm still waiting for a 5 minute setup to occur anyway. So if they don't give me a setup that I like on the 5 minute, there's no trade. Plus, I would like to see a break of structure. That would even make me even more want to take the trade. So it's like it's not really a checklist, but I would like to see certain things happen before I take my setup on a 5 minute. Now, again, we talking about these setups because most of the time we're taking 5 minute setups and they don't have no higher time frame confluence. So I want y'all to understand the difference. So you can see like, okay, this should run for way more than 1-to-1 RR, like way more than that. Okay. Don't be too confident on the 200 when it comes from a higher time frame zone. Exactly. Like just how we just saw up here, where this was a zone up here, but look at where the 200 is at. It's because like the EMAs is only moving with price. So they're going to react to what price does. They're not going to just guide you. That's why I say the EMAs can be blinders sometimes. They help, but they can be blinders sometimes because you can't catch this sale because you think that this is an uptrend because we're above the 200. In reality, they're already ready to drop. You feel what I'm saying? So just pay attention to the higher time frame and don't be afraid to go towards the 200 if this is a higher time frame setup. Don't be afraid of that. Okay. But okay, so I'm going to go to this US 30 trade. This US 30 trade. That's the exact reason indicators lag, because they react to price and don't guide you. Facts, bro. Facts. Okay, so these last two setups, I'm going to delete these two. These last two setups, this is a 1 hour demand, and I'm going to show you how you can get in on the 5 minute and even the 1 minute for both of these. So look at the timing. Like I really want y'all to put emphasis on the timing. So we have a demand that's literally right here that took 1, 2, 3, 4, 5 days to come back. Okay. And it came back literally at New York session. Okay. So let me go to the that 1 hour didn't have a break of structure. No, that 1 hour definitely had a break of structure, bro. I ain't gonna lie to you. Like these highs right there, like that's being broken. It's a break of structure, bro, for sure. But let's go to the 15-minute chart, and we're going to focus in on this zone right here. I'm going to put another box right here. With the time frame analysis, will you start seeing the trend change first on a lower time frame before the heart? Yes, absolutely. Absolutely. You will start seeing structure being broken the opposite way. Like, so say if we're on a downtrend and we're catching a supply at the end of that trend. You're going to start seeing that they're going to only give you a 1-to-1 RR, and then they're going to break structure to the upside. And then that move that's going to go up is going to keep going. Like it's going to move way more. Like, you feel what I'm saying? I'm like, okay, so that was really a reversal happening. That's why I say New York love doing reversals, like continuations. That's going to happen. But for the most part, bro, it's damn near going to be reversals most of the time. And they're going to be grabbing liquidity before they do that anyway. So let me go to the 15-minute chart and see if I can make this zone smaller, okay? But again, I'm always going to draw a line though. I'm not gonna make my zone smaller. I'm gonna draw a line. So this is the 15-minute line right there. I think you misunderstand my question. I sent you a question in Discord for the trade I took whenever you get a chance. Okay, bet, I got you. Okay, so this is that 1 hour demand. Now this line right here, this is strictly for the 15-minute. I'm just gonna just type in 15-minute. 15-minute right here. Oh crap. Okay, 15-minute right there. And then let's go to the 5-minute. And we're gonna go back into that area. And let's see, is there another gap within that setup? I mean, within that 1 hour demand. So if we look at this candle right there, that candle right there got tapped into with this wick. So no, but this one never got tapped into it. So I'm going to type in 5-minute right there. But I'm still going to keep my 1 hour zone exactly how it is, just in case that they don't tap into it. Okay, so we're just preparing for all situations. So let me just make sure y'all can see that. This is a 1 hour demand. That first line is a 15-minute, that lowest line is a 5-minute, and we're preparing for wherever they stop at. And wherever they stop at, I want to see a 5-minute setup happen right after they stop where they want to stop at. Okay. Or for people that like to get real crazy with a sniper entry, you can try to find an entry on a 5-minute with the breaker structure. Okay. I mean, not on 5-minute, but the 1 minute with the breaker structure. You'll keep both 15 and 5-minute lines. Yeah, for sure. Just to see where they stop at. We still know that we're in a 1 hour demand. This is only for higher time frame setups. We know that we're in a 1 hour demand, but where do they actually want to stop at? Why is there a double top? Don't look like a breaker structure. What you mean? These are swing highs right here. This move started right here. They broke this high, that high, and finally came back. That's breaking structure. Could you explain why you didn't choose the demand that broke the highs above it? Right here? Talking about this one right here, bro. I didn't choose this one because it got tapped into already. So look at the one that took off before. Look at that green candle. Let's zoom in, because we got to understand gaps. Like if you don't, you're just going to be confused. So look at that green candle that left the box, and then look at this green candle that left the box. They tapped into it already with that third one. That third one tapped into it already. This one didn't. So they already bounced out the market with this one right here. So we're not worried about it. Same for this one. They tapped into it. They kept going. So they left the gap that was all the way down here, and it took 5 days for it to come back. That's why I say when y'all be trying to wait for the higher time frame setups, like you're not going to be trading every single day, because you're not going to get all those stars aligned every single day. That's just not what you're going to get. So you have to be okay with that. You literally have to be okay with that. Now let's take this off. And I'm going to go to the 5-minute. Now, if I go to the 5-minute, what I'm looking for is to see, okay, what are they giving us after they start rejecting? And I'm going to look at the EMAs as well. Again, you're not going to take this if you're just strictly looking at the EMAs and you're not looking at the higher time frame. You would do something like this. This is what you would do. You would do this, and let's fast forward, and then you lost. Just like that, you lost because you didn't look at the higher time frame to see where were we at. You took that sale, that break candle, next candle, boom, now you pissed off. It's that simple. Now your whole day shitty because you didn't look at the higher time frame. So we have to look at the higher time frame, bro. Like it's imperative. It's imperative. So let's take this off. Now, now this is a demand right here. I'm not gonna lie to you. This is a demand right here. You can easily take this. But say if you're not comfortable with this setup, I'm gonna take these EMAs off. You're not comfortable with taking this demand. Let's see what the 1 minute is looking like. Go to the 1 minute. Now let's look at the 1 minute. It tapped into that and it started going up. What I would look for on the 1 minute, like by default, it has to have a breaker structure. It have to. It literally have to. And I'm going to give my stop loss some breathing room because on the 1 minute. Now, again, I don't trade the 1 minute, but for people that really want those great risk rewards, you're going to have to first of all, you have to have a breaker structure on the 1 minute. I'm sorry. Like if it don't have a breaker structure on 1 minute, do not take it. Don't take it. Okay. So right here, we tap into the 1 hour on demand. It never tapped into that 15-minute zone or 5-minute zone, but they're starting to leave the area. So now since they're leaving the area, we need to find some type of entry that's going to make sense. So if I'm looking at this, I see a demand right here with the breaker structure. If you can't see structure, go to the line chart. We got highs that's right here that's being broken with this move right here. So if I put a demand zone right there and draw it across, it literally tapped into it perfectly. Literally perfectly. Can you hear me? Can y'all hear me? I don't know why it's like breaking up. I literally don't know why it's breaking up. Okay, what I was saying was, if you want to take something like this on the 1 minute, it have to have a breaker structure because the 1 minute is so messy. I would not recommend taking any 1 minute setup that don't have a break of structure. Like that's like minimum for me if I even consider a 1 minute entry. So with that being said, this right here, this move have a breaker structure. It broke all of these swing highs right here. So on the 1 minute zone are more pips. No, this is for you to get like a crazy risk reward. I'm not gonna lie, because again, this is still a 1 hour demand and we're scaling in on the 1 minute. Why didn't you include the wicks? What do you mean? What do you mean? Exactly. If you're not experienced with the 1 minute, bro, you're gonna get chopped up, bro. Facts. No, I always draw my demand with the entire candle. I didn't draw it on this one because it already got tapped into. Again, you got to understand gaps to understand why I drew it over this candle instead of just this candle that already got tapped into. This one never did. It left the gap. It tried to come back into it, never tapped into it. And then it came all the way back and finally tapped into it with this move. Okay. So this is a 1 minute entry right here. Now, how I would enter this is I'm going to wait for the break of the candle, but I have to give my trade a little bit of breathing room. Okay. Like bro, I have to emphasize that. I will put my stop loss either underneath that zone on the 1 minute or probably like halfway through it, depending on how deep they go into that demand. Either way it go, it's the 1 minute. So it can get very choppy, but the goal is to get a crazy risk reward, like probably like 1 to 3 minimum, because we're on the 1 minute. The 1 minute is going to be a little bit noisier, but that's how you get the better RRs. And we still know that this is a higher time frame setup. So let's go to the 5 minute. And again, you could have still hopped in this on the 5 minutes simply by just drawing your zone like this. If you don't want to overcomplicate it and just want to just strictly trade off the 5 minute, you can just do that. But this is a higher time frame setup. And you see how crazy it just went. It just went past that supply that we had marked up with the EMAs telling us that this is a downtrend. That's what I'm saying. You have to really pay attention to the higher time frame. Okay, so I have one more setup on USD CAD, but I hope that this is making sense. All we're doing is waiting for a higher time frame zone to get tapped into. Mark up our zones to see where exactly they want to stop at, because they may not want to stop at the 15 minute or the 5 minute within that 1 hour demand. Wherever they stop at, wait until you see a 5 minute setup. And if you want to try to catch a 1 minute setup, it has to have a breaker structure. There's no exception. Like the 1 minute is so messy, you can lose crazy. So you have to have a break of structure. Like I want to emphasize that because you're going to get like the risk reward is going to be crazy, but at the same time, you may get in at the wrong time and lose before you win. That comes with trading a 1 minute chart. Like 1 minute chart can be very messy. So 5 minute doesn't have to have a break of structure. It don't have to all the time. You can look at the trade ideas. Some of them don't have a break of structure and they hit. So they don't have to, but if they do, it just makes it even more better, honestly. Okay, so I'm gonna go through this last one, USD CAD, and then that'll probably be it. You will lose if you get lost and stuck on the 1 minute. I promise you. I'm trying to tell you, bro. I'm trying to tell you, like if you haven't watched all the look, I'm gonna say this before I get off of this. If you haven't watched all the webinars, if you haven't like caught 5 minute setups, you shouldn't even be on 1 minute. I'm just be real because you can get chopped up. Like I'm not gonna lie to y'all. Like you can get messed up. Can you talk about getting an entry confirmation on a 5 minute for the break, but that candle hasn't made a high yet? Are you talking about like say if I have like a supply setup, but it don't have a break of structure, but it's like right there at the 1 hour supply, if that makes sense, with no break of structure? I'm not really understanding what BG talking about. I lost too much on a 1 minute. Be careful. Yeah, no, definitely. Okay, so right here, we clearly know that this is a winner, but I just want to break it down. Okay, so we got aggressive selling come out of this area. Literally, it took 1, 2, 3, 4, 5 days. Take that into account. For people that want to only trade higher time frame setups, it took 5 days for it to come to this setup right here. Okay, now y'all see how the timing line up with the setup. It literally happened in New York session. This is USD CAD. It's in its session, so it had volume, but it took 5 days. So again, people that want to trade every single day, you're not going to be trading every single day if you want to trade 1 hour setups and you want to get those good risk rewards. You're going to have to wait, literally. So let's go to the 15-minute chart and see if we can mark up our zones in this area. I'm going to circle it. I'm going to circle this right here. Let's see if we can make our zone. We're not making our zone smaller. We're just putting our horizontal lines to see where they can potentially stop at. So let's go to the 5 minute. Let's go over here and let's zoom in. Let's see if we can make mark up our zones. So if I'm looking at this on the 15-minute chart, can I mark up my zones anywhere? Yes or no? Can I mark up some horizontal lines up in this area? Let's see if people know what I'm talking about. Because I can talk about this all day, but if you don't know what's going on, then it's just like. Okay, all right. I just had to make sure, people know what I'm talking about, because I could just keep talking and then people just going in one ear out the other. So no, yeah, you can't make a 15-minute horizontal line as far as your supply zone. You just can't. You literally can't. So let's go to the 5 minute. Yeah, it's no gaps. It's no gaps on the 15. We don't see anything. There's no gaps. So let's go to the 5 minute. Let's go to the 5 minute. Let's go all the way over here. All right. Now I have the 5 minute horizontal line marked up on that green candle. Now, if I look over here, everything else been tapped into. It was a supply that was right here, but that got tapped into right there. So nothing else can really, there's no gaps within that supply. Now, I'm not about to, this 1 hour supply, I'm not about to go to the 1 minute and try to mark up my horizontal line. No, I'm only gonna do 1 hour, 15, 5. Okay, that's it. I'm not gonna try to make my zone even more gaps all the way up here. No, I'm not gonna do that. 15 minute, 5, okay? Now let's go all the way back over here. Now, that 5 minute, it literally tapped straight into it. Like it tapped straight into it. That line, that 15, no, that's a 5 minute line. That 5 minute line right there, it tapped straight into it. Now, let's see what it looked like on the 1 minute after it tapped into that 5 minute supply. Okay, that 5 minute supply, I'm going to show y'all. So this right here, this is that 5 minute supply that was within that 1 hour. Okay, so you see how they wanted to stop at the 5 minute supply and then they drop. But also pay attention to what happened right here. they tapped into that 1 hour supply and still gave you a trade. So that's really two setups that you could have won on if you looked at the 1 minute. Now, again, the 1 minute can get messy. This 1 minute don't even have a break of structure. So would I even have taken this? Probably not. Probably not. And honestly, it never really tapped into it because the zone is really right here. So honestly, scratch that. It's a no. It's a no for me. It have to have a break of structure, but if it doesn't, like, just be very careful, bro. Just be very careful. Now, if I'm looking at the 1 minute, they tapped into the 5 minute supply. I'm really waiting on a break of structure, to be honest. Now, these right here, these are supplies right here. This right here, that's a supply. This is a supply and never tapped into it. This is a supply. But you see the main energy is going down. Like the energy is literally just is dropping. Like there's no debate, it's dropping. So could you catch this supply right here all the way at the top? Yes, you can catch that 1 minute supply at the top. But me personally, I'm going to take this one because this is following structure. We got our structure being broken right here. And it comes back into that zone drop. You can take the break on the 1 minute, put your stop loss. Don't hug it. This is the 1 minute. Don't hug it. Give it something like this, something like that. And this trade can really turn into something crazy. I'm not gonna lie. It can literally turn into something crazy because this is still the 1 hour setup. So I hope that this is making sense. This got a break of structure. This 1 minute supply don't have a break of structure, but it's still held. And this one never tapped into that supply. And if we look at the 5 minute, and we put the EMAs on, let's put the EMAs on. Would you have even considered this setup? No, you wouldn't have, because you're still trying to, like, the 200 EMA, like they help you, but New York like to do reversals. That's what New York does. It's Friday 9:35. 9:35. All right, high probability setup. Okay. Do I have any questions before I start answering questions? Like I'm gonna just go over a little bit today because like I did a lot of talking. But do I have any questions on this setup in particular? This is still stuff that we do, but this is just so we won't avoid missing setups. Okay, because you can adjust your zone, but if you don't touch your zone, you don't want to hop in. So just put a horizontal line to see where they're going to stop, wait for identical setup on a lower time frame, take the setup. You know what I'm saying? Okay. So if we do not wait on the 1 hour, do we look for the 5 minute without the 1 hour confluence? So, okay, so say, no, I think Monday is a holiday. So say Tuesday, we see 1 hour demand. This hypothetically, we see a 1 hour demand, no higher time frame confluence. We're going to take it, but we understand the setup. We understand this may not have a runner. We understand maybe I should close majority at 1-to-1 RR. Why? Because this have no confluence with a higher time frame. Okay. I hope that makes sense. Yes, New York session, major reversals with liquidity grab. Yep. Oh, can you show a 5 minute entry on this setup? Okay. Let me see. I mean, you could take that one, honestly. You can literally take the break on that one, literally. So it tapped into that 1 hour. It tapped into that 1 hour zone, but we have that horizontal line for the 5 minutes. So you can literally just take the break on the 5 minute because we adjusted our zone and they stopped at the 5 minute zone. See, that's the difference. If they don't stop at the 5 minute zone within the 1 hour supply, don't just take the 5 minute break. But if they stop at the 5 minute supply within the 1 hour supply, you can take the break, if that makes sense. So say if they didn't tap into that 5 minute horizontal line and they just start dropping right here, don't take that break, wait for an identical setup. But if they do tap into that 5 minute supply, you can take the break. I feel like I'm losing everybody on here. I feel like I'm losing everybody on here. I really do. Okay. With the break right there, that candle hasn't made a high. Are you still putting your stop loss? Yes, I'm putting my stop loss above. Do you give your trades a second chance? Yes, I do. I haven't recently, but say if a supply stop me out and then they're ready to break the candle low again, I may hop in. It just really depends. But yeah, I do give trade second chances for sure. Is there a reason you don't like to trade pre-market on in indices? Sometimes I do. Like I'm not gonna lie, sometimes I do trade pre-market with indices, but most of the time it don't be no volume. They're like picking up literally right at the open. So it just you gotta take it with a grain of salt. It was some weeks where pre-market, NAS 100, SPX hitting. Then some weeks it's just on nothing. So you really just gotta just take it with a grain of salt and understand that pre-market can be very high risk and low volume until they start doing that little liquidity grab BS that they be doing. Okay, so I'm gonna go to that Nash trade, and then I guess we can just wrap this up. Do you think that the previous untapped high lows are basically liquidity grabs and reversals? What do you mean by previously untapped highs and lows? Like once they break above and they start rejecting with wicks, they're gonna go the other way. They're literally gonna go the other way. But let me go to this Nash trade. I don't really know what bro was talking about. What were you talking about with? Let me zoom in. You said 939 for 940 NAS 100. 935. Oh, this is okay. So people that be kind of confused on liquidity grab. I kind of really want to speak a little bit on liquidity grab, but the topic of this webinar was just scaling in on higher time frame setups. That's gonna be the title of it. But liquidity grab setups, like we gotta talk about this because some people be like, I missed that move. I didn't take it. Bro, you can take liquidity grab trades. I just don't trade that. I don't trade the liquidity grabs like that, but they be there. So when you be seeing NAS do stuff like this, where they're dipping lower and grabbing liquidity like right here, and then they go straight up, and then it just drops straight down, you can catch those setups. Just pay attention to the wicks though. Pay attention to where the highs are at. And once they do a rejection, like a big long wick, they're gonna go the other way. They're literally gonna go the other way. So right here, like I saw it happening, I just didn't take it. I'm just like, they grabbing liquidity right here. So let me where's replay mode right here? So when the open happened, it was a lot of ways you can hop in this. You could have hopped in this on a sell and a buy. So we got liquidity that's sitting right here. What do? They went up and then they dropped it. Grabbing that high, dropped it. Then what do? Went lower, dipped lower than that low, then went back up. This is two dubs right here, but you got to be on point. This on a 5 minute. You got to be paying attention. You can't just be like in the chat typing and stuff and you're missing setup. You got to be looking at this stuff. Like you can't just be trying to like chat and you know what I'm saying? Like no. Okay, what loss do you want to break down? And then that'll probably be it. Which loss? SPX. Okay. What day was that? I be forgetting. I ain't gonna lie. What day was that? Monday. Okay. Okay. But yeah, I hope y'all understand what I mean by just the higher time frame, supply and demand zone, and scaling in, marking up your horizontal line for us a 15-minute and 5-minute, and just waiting for another setup to occur after it tap into the higher time frame zone. Okay. So you said Monday SPX. Let's see. What was Monday? The 30th? Monday was the 27th. Okay. Okay. And we took what did we take? We took a supply or something. I'll be forgetting, bro. I'm gonna just be real. We took a supply. What did we take? Did we take a supply right here? We took a demand. Or what did you take? Let me see. Let me check my MT4. Hold on. Okay, 27th. Nobody remember what we took? I don't remember. Yeah, I'm about to say, like, a demand? Yeah, I'm about to, yeah, bro. You traded Monday, bro. Wasn't that a holiday or something? I might be tripping. I don't know, but I don't. There was a SPX loss on Friday. I thought, yeah, I lost on Friday with SPX, but Monday, thought it was news or something. Yeah, I don't think it was Monday, bro. I ain't gonna lie. But yeah, just show me the chart that you lost on, bro. Then I'll just help you, bro. Anybody got any questions as far as this webinar? I hope this made some sense, bro. I hope this made some sense. SPX on yesterday? Okay. But yeah, but bro, just send me your chart, bro, and then I'm gonna just check it, bro. I don't know how to pronounce your name. But SPX on Friday, yesterday's loss. What did we take? Oh, it was this right here. Oh, yeah, that pissed me off. Okay, so this right here. Understand, bro. This setup right here that we took that I lost on, well, that we lost on. This was a market structure break, no confluence with the higher time frame, supply. And if you go to the 1 hour, there no confluence. It was nothing going on right there. And it was a pre-market setup. So this setup was literally just a loss and it was shitty. I gotta be real, because I had a feeling that this was gonna lose. And then I looked at the EMAs. Now remember, we don't put too much emphasis on the EMAs, but the 200 is flat. Me, I thought that it was going to just bounce off the 200 and then just start dropping, but no, it never did that. It literally never did that. And some of y'all, did y'all take this? I think it was like a demand. I think y'all took this one right here, and y'all won on the buy. I was taking a sell and I lost. But y'all see how when there's no higher time frame confluence, we all are kind of taking different setups. Y'all see that, right? Like, oh, this is a demand right here. Oh, this is supply. It's because we're taking a setup that have no confluence with the higher time frame. So there's no bias. So everybody may take a demand. You may win. Another person may lose. And it's just like, okay, we're trading in a range. We don't have a strong trend. Like there's no trend. Great question. How do you cut your losses? You cut your losses good. Okay, so yeah, I get that all the time too. So I can talk about that before I get off of this. So cutting losses. Okay, so who is trading their real account? Who is trading their live account, funded account? No prop firm. No prop firm. Because I can't, what I do, I'm not gonna do this on my like prop firm. Yo, send it to me in the Discord, bro. In the Discord, bro. Okay. Okay, it's like two people. I feel like a lot of people are prop firm. But basically, like how I cut my losses is, okay, so like this setup right here. Once I see that they are not dropping, I pay attention to the wicks and how many times are they breaking the high of candles. But once I saw that this is pushing in momentum and my stop loss was, let me take these EMAs off. My stop loss was right here. I have my stop loss right here. It was like right here. And I was targeting like these lows right here. Now, it should be pushing in momentum. Like we take these setups every week. Like no cap, even next week, these are gonna be the same type of setups. It should be pushing in momentum. Why is it not pushing in momentum? Then I'm paying attention to the 200 EMA. It's flat and you're not pushing in momentum. When candles like this is pushing up, it shouldn't even be coming all the way up here, because I'm paying attention to the breaks of the candles. Why are you coming all the way up here? For what? What are you coming up there for? So once I see that the candle was like right up in here, I'm cutting the loss early, because we should be breaking down. We shouldn't even be creating these type of wicks. We should be moving in momentum. We shouldn't even be having any type of wicks going in the opposite direction to go up. No. So I pay attention to the candle breaks, the rejections, and where am I located far as the 200 EMA. Now, again, like I said, we're not putting too much emphasis on the EMAs, but this is just a 5-minute setup. You got to understand. So what can I work off of? If we're not working off of anything on a higher time frame, I'm only working off of this 5-minute right here. I don't have no other information to go bases off of. And then when I look at the higher time frame, when I look at the 5-minute or the 15-minute, oh no, this really was a 15-minute demand. Now that I'm looking at this is definitely a 15-minute demand. No cap. Because it's literally right there, it's clear as day. Let me go back to the 5. Yeah. Yeah, that was a 15-minute demand. That's tough. Okay, so honestly, this was actually a 15-minute demand. I'm looking at it like, hold on. Let me look at it one more time. Dude, it's got a breaker structure. No, I do not. Okay, so this demand ended up holding on the 15-minute. So really, if we would have just paid attention to that, we probably wouldn't have never took this setup. And then another back-to-back demand happened right after. Yeah, so honestly, now that I'm really looking at this, the 200 EMA probably never even mattered in this situation. It was probably just because this was a 15-minute demand, honestly. We can use the yesterday's high and low along with the 5-minute as influence without watching the 4-hour. No, yes, you can definitely look at the yesterday's highs and low to see where they taken out liquidity, because most of the time they're doing reversals on the yesterday's highs and lows. But now that I'm looking at the setup, this is definitely a 15-minute demand that held, and we took a 5-minute. Anytime when it's a higher time frame up above from your setup, so say if we take a 5-minute demand and then it's running into a 15-minute supply, that's definitely high risk. And I don't know why I'm just now seeing this, but this is definitely a 15-minute demand that just got tapped into and it held, and it just kept going up. And we were taking a 5-minute supply in conflict of that. You feel what I'm saying? So that's probably why we lost for sure. Now that I'm looking at it. You mentioned the reasons a loss happens when you say it reaches supply and demand as a reason. You mean higher time frame supply demand? Yes, absolutely. Absolutely. All right, so I'm about to end this webinar. I'm just gonna try to do like a quick little recap. So 1 hour, 15-minute, 5-minute. You're not going to see a 1 hour setup every single day. Y'all saw it took 3 days, 4 days, 5 days for it to line up with New York session. But when you do see it lining up with New York session, whatever the EMAs is looking like on a 5-minute, you're going to kind of have to just knock that out. Like whatever the EMAs is looking like on a 5-minute is going to make you feel like you're counter trending, but when in reality, they're ready to reverse. The EMAs is not going to be in your favor. So just scratch that out. When I see a 1 hour supply and demand setup, I'm going to go to the 15-minute chart, throw a horizontal line. I'm not going to adjust the box. I'm just going to throw a horizontal line on a 15-minute chart. I'm going to go to the 5-minute chart, throw a horizontal line. I'm going to wait and see where they're going to stop at. Wherever they stop at, whether it's the 15-minute setup or it's the 5-minute setup, wherever the line is at, wherever they stop at, I'm going to literally wait until I see a 5-minute setup occur. If you want to take a sniper entry on the 1-minute chart, you need, I gotta put an emphasis on that. You need a breaker structure by default. It's no debate. If you don't have a breaker structure, don't take it, because when a 1 minute, it can get messy. You can lose very quickly. You're gonna be tight. You're gonna be mad. You're gonna be mad. But when you see a 5-minute breaker structure after the 1 hour setup occur, that makes it even more better. So before you even consider the 200 EMA for the 5-minute time frame, see the higher time frames doing first, important zone structure, and then you can look at the 200 EMA for added confluence. Correct. when everything lines up like the cherry on top. Yes, absolutely. But again, sometimes New York session will be on a downtrend, and if you don't pay attention to the higher time frame, you're going to see that they're dropping to tap into a higher time frame to go back up. So the EMAs is not going to be in confluence in that point, because you're going to be scared because you're thinking it's a downtrend because the EMAs. In reality, they're just dropping it to tap into a higher time frame zone. Okay. So I hope that this made sense on this webinar. We went over, but I just felt like we need to talk about this because week by week, we take 5-minute setups and people be DMing me, bro, my trade's getting stopped at break even. And I'd be like, okay, I always say, what does the 1 hour look like? And most of the time, the 1 hour, it don't be nothing there. It literally be nothing there. So if you're really like, you're big on big risk rewards, like if you're like, that's a big deal for you, you're going to have to wait until the higher time frame line up. That's just what you're going to have to do. Like straight up. But that's all I got, man. Y'all have a good weekend. Monday, I think it's 4th of July. I don't think anybody trade Monday. It's the holiday. So I think we're going to continue this on Tuesday. I don't know, but I may still show up on Monday, but I don't think I'm gonna place no trades because it's the holiday, but I think I'm still gonna show up. So if you're gonna be in the chat Monday, then we're just gonna see what's going on. But y'all have a good weekend, man. Yeah, bro, just have a good weekend, bro. Y'all don't gotta be stressed out, bro. Just enjoy life, shit. But all right, y'all have a good one. I'm going.